welcome back to Let's Talk Real Estate. My name is Kristen Jock with Compass, and on this week's episode, I am discussing a new trend in the world of investment and the world of real estate, which is called micro-investing. And in particular, I'm going to be discussing micro-investing in relation to real estate. So what is micro-investing? It allows consumers to buy shares of properties and customize portfolios for as little as $5. So it's not too hard to see why this might be causing a bit of a stir. It's opening up the possibility for people who otherwise wouldn't be able to invest in real estate to be able to have the opportunity to own at least a portion of a piece of real estate. One of the newest companies on this type of a platform is called Compound, which is actually a New York City-based micro-investing company. And they sell properties at a profit for investors, and they make their money by representing the purchaser in the initial transaction of the property and collecting a fee from the seller. So pretty similar to how it works in the residential real estate model. So they'll hold the property for a period of 3 to 5 years, after which they'll sell the property and distribute the profit to its investors. So for this reason, they're typically looking at properties which have the potential for appreciation over the course of 3 to 5 years, which is their typical holding period. And there are some other companies that exist on a similar platform, such as Fundrise, CrowdStreet, RealBlocks, and Roofstock. So with any of these, they may operate on a slightly different level. So some of these real estate crowdfunding websites will focus on debt, some will focus on equity, and some will focus on a little bit of a mixture of both. So it's really important whenever you're deciding whether to invest in one of these micro-investment strategies to really understand what it is that you're investing in and read the prospectus thoroughly before doing so. And lastly, I just wanted to touch on a couple of pros and cons for micro-investing in real estate. So the biggest pro, which you could probably guess, is that it requires very little to get started. Another pro is the fact that you can diversify your assets. So whereas if you're purchasing a property outright, you may only be able to afford, if even at all, to invest in one property. However, with micro-investing, it would allow you to potentially invest in a variety of different properties and thereby sort of reduce your risk or your exposure on any one particular property. So some of the cons, and I actually found the first one on Dave Ramsey's website. He was talking about micro-investing, and he quoted, "Micro-investing produces micro results." So obviously, if you're investing very small amounts of money, it wouldn't be very practical to expect anything in the way of a large return. Whereas historically we see in New York City, especially people that purchase buildings and hold them for decades and then sell them, have a significant nest egg when they do so. I don't think that's something you can expect through micro-investing. And the second con is that you can't invest in specific properties. So whatever properties are invested in would be determined by the professionals coordinating the efforts through the company and not you yourself as an investor. So I wanted to touch on this idea of micro-investing just because I am getting a lot of questions from friends, from clients about what it is and where I think it's going, and so I wanted to just touch on it here so that people have an idea of what it is, what are some apps out there. If you've had any experience with micro-investing in real estate, particularly with any of these applications that I spoke about today, I would love to hear your story and your thoughts on the experience. So please leave your comments below. I hope that you all have a wonderful week and talk to you soon.